Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Hey everyone, welcome back to another exciting investment update. Today, we've got some absolutely incredible stories from the world of tech and investing that are literally reshaping our future as we speak. From Wall Street breaking records like never before, to Adobe transforming from just image software into an AI powerhouse, all the way to NVIDIA and OpenAI building their empire in the UK. This is truly a game-changing moment in history. The content might be a bit lengthy today, but it's packed with stories from the investment and technology world that are genuinely massive. These aren't just regular market movements we're talking about. We're witnessing fundamental shifts that will define how we work, invest, and even how we use technology every day. This isn't your typical news update, but rather insights into transformations that will impact everyone, from our work methods to investment strategies, and even how we use technology in our daily routines. What makes today's discussion so important is that we're not just looking at isolated events, but rather interconnected developments that are creating a completely new economic landscape. The AI revolution isn't something happening in distant Silicon Valley labs. It's reshaping industries, creating new job categories, and fundamentally changing how businesses operate around the world.
Joy Up Invest podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours.
All right, let's kick things off. The U.S. stock market was absolutely on fire today. The Dow Jones jumped 1.4% and broke through 46,000 points for the first time ever in history. The S&P 500 gained 0.9% and the Nasdaq grew 0.7%. But here's what's really surprising. The market soared even though the economic data wasn't exactly stellar. Inflation in August rose 0.4%, higher than economists predicted, and unemployment benefit claims shot up to 263,000, the highest number since 2021. You'd normally expect markets to react negatively to this kind of news, but instead, we saw record-breaking gains across all major indices. This disconnect between traditional economic indicators and market performance is absolutely fascinating and tells us something profound about where investor confidence really lies these days. From my perspective, this shows just how powerful the AI revolution has become. It's so strong that it can push through less than great economic numbers and keep investors optimistic about the future. Investors still believe AI will drive our future, even when current economic indicators aren't looking so hot. This demonstrates that market sentiment is heavily focused on long-term technological transformation rather than short-term economic headwinds. The fact that tech stocks continue to lead this rally despite traditional economic concerns really highlights how much confidence the market has in AI's potential to reshape entire industries and create new value. What we're seeing is essentially investors betting on the future rather than the present, believing that AI will solve many of our current economic challenges in ways we haven't even imagined yet. Now let's talk about the Fed, and wow, what a tough spot they're in. Jerome Powell and his team are facing what we call the ultimate dilemma. Annual inflation sits at 2.9%, the fastest pace in 7 months, but we're also seeing signs that the job market is cooling down. This puts the Federal Reserve in an incredibly difficult position, where they need to balance fighting inflation while also supporting an economy that's showing signs of weakness. It's like trying to drive a car while pressing the gas and brake pedals at the same time. Economists from Scotiabank are saying that a big 50 basis point rate cut might be too risky because inflation has been accelerating for 3 straight months now. The Fed is essentially caught between two competing pressures, and any decision they make could have significant consequences for both inflation control and economic growth. I think a gradual 25 basis point cut makes more sense. It balances supporting the overall economy while not letting inflation run wild again. This measured approach allows the Fed to provide some economic stimulus without completely abandoning their inflation-fighting stance. But here's the most interesting part. Even with all this uncertainty swirling around monetary policy, the market still has incredible confidence in technology, especially AI. This shows that investors are looking at the long-term future, rather than getting caught up in short-term policy problems. They're betting that AI will solve many economic challenges down the road, even if we can't see the immediate benefits today. This forward-looking optimism is remarkable, especially when you consider how much traditional economic indicators usually influence market sentiment. It suggests we're in a unique moment where technological innovation is viewed as more important than conventional economic metrics. Now here comes the biggest news of the day. NVIDIA and OpenAI are preparing to announce a multi-billion-dollar investment to build data centers in the UK, partnering with Nscale Global Holdings in London. This move happens right when President Trump is visiting the UK, which shows the important political dimension of global AI competition. This isn't just a business decision, it's a strategic geopolitical move that signals how AI development has become intertwined with international relations and national security concerns. The timing of this announcement, coinciding with high-level diplomatic visits, suggests that governments are actively involved in facilitating these major tech investments. It's fascinating to see how AI infrastructure development has become a matter of national interest for countries around the world, with nations competing to attract the biggest players in the AI space. I don't think it's a coincidence that these two tech giants chose the UK. It's about creating a strategic base in Europe and spreading geographic risk, especially given the current trade tensions and regulatory uncertainties in other markets. After OpenAI previously committed $500 billion with SoftBank in America, though that project has moved slowly, expanding to new markets shows their real commitment to building global AI infrastructure. This is truly global chess, not just regular investment. The move allows them to serve European markets more effectively while also creating backup infrastructure in case of geopolitical issues. What's particularly interesting is that this investment will create tens of thousands of jobs in the UK, boosting the local economy, while potentially creating some concerns about depending too heavily on foreign technology and expertise. Meanwhile, Chinese tech companies like Baidu and Alibaba are competing fiercely in their own domestic market, but the fact that NVIDIA and OpenAI chose European expansion over Asian expansion sends clear signals about avoiding political and trade complications in that region. But the company I think represents the perfect example of adapting to the AI era has to be Adobe. Their Q3 results came out incredibly strong, showing exactly how a traditional software company can successfully pivot to become an AI powerhouse. Earnings per share hit $5.31, beating the expected $5.18, while revenue reached $5.99 billion, growing 10% compared to last year. These numbers are impressive on their own, but what makes them truly remarkable is the story behind them. Adobe has managed to transform its entire business model around AI integration. But here's the most amazing part that really blew me away. Adobe now has over $5 billion in annual recurring revenue from AI. This isn't just a small side business or experimental revenue stream. This represents a fundamental shift in how Adobe generates value for its customers and creates sustainable revenue streams for itself. This shows that integrating AI into products like Adobe Firefly and Adobe Experience Platform is actually generating substantial real revenue right now, not just promises of future profits. CEO Shantanu Narayan said AI is the biggest opportunity for Adobe in decades. And honestly, the numbers prove he wasn't exaggerating at all. Adobe expanded their fiscal 2025 revenue target to $23.65 to $23.70 billion, which shows incredible confidence in their AI strategy. From a professional investor's perspective, I think Adobe is a fascinating case study because it's not just any tech company randomly jumping on the AI bandwagon. It's a company with an already strong, loyal customer base that can use AI to add genuine value to existing customers. They don't have to exhaustively hunt for new customers or completely change their business model. Instead, they're enhancing their existing products and services in ways that make their current customers more productive and willing to pay higher prices. The key insight here is that Adobe isn't just talking about AI for marketing purposes or trying to ride the hype wave. They're clearly demonstrating that AI is genuinely helping improve their customers' work efficiency in measurable ways, like creating images 10 times faster than before, making video editing significantly easier and more intuitive, and providing more accurate customer data analysis that actually helps businesses make better decisions. These aren't theoretical benefits or future promises. They're real improvements that customers are experiencing right now and are willing to pay premium prices for. But I have to remind everyone that Adobe's success today didn't come easily or overnight. This transformation took years of strategic planning and execution. They've been investing heavily in AI research and development for many years, often before it was trendy or profitable to do so, and had to compete with formidable challengers like Canva, which makes design accessible to non-professionals, and Midjourney, which creates stunning AI-generated images that rival professional work. The fact that Adobe continues to grow and maintain its market leadership in such a fierce competitive environment really shows the incredible strength of their brand recognition, customer loyalty, and most importantly, their ability to innovate and adapt to changing market conditions. This is exactly the kind of company transformation story that smart investors should be studying and learning from. What makes Adobe's story so compelling is that they didn't just add AI features to their existing products. They reimagined how their entire product suite could work together to create more value for customers. They understood early on that AI wasn't just a feature to be added, but a fundamental technology that could transform how creative work gets done. This strategic vision, combined with their execution capabilities, is what separates successful AI adoptions from companies that are just following trends. Speaking of industry transformation, there's some fascinating news happening in the entertainment sector that really illustrates how AI is forcing entire industries to evolve. Warner Bros. Discovery stock jumped almost 30% after news that Paramount is preparing a cash buyout offer. This reflects major consolidation in the media and entertainment industry as it adapts to the streaming and digital content era. This kind of merger usually happens when an industry faces massive disruption, and companies need to create scale big enough to compete with the new giants like Netflix and Disney+. What's really interesting about this consolidation wave is that it's not just about traditional competition. It's about preparing for an AI-driven future where content creation, distribution, and personalization will be completely transformed. These companies are essentially trying to build the resources and capabilities they'll need to compete in a world where AI can create personalized content for individual viewers. I think this trend is really worth paying attention to because it shows that AI's impact isn't limited to just obvious tech companies. It's forcing every industry to fundamentally rethink their business models and competitive strategies. Companies with content libraries and creative capabilities will need to merge and pool their resources to compete with major platforms that have both advanced AI technology and massive amounts of customer data. What's particularly interesting to think about is that in the near future, we might see Disney or Netflix using AI to create content that's specifically customized for each viewer's preferences, viewing history, and even mood. We might even see the creation of completely digital actors and entertainers that look and feel incredibly realistic. This kind of technological capability requires enormous resources, advanced AI systems, and massive data processing capabilities, which explains why we're seeing this wave of consolidation. These mergers aren't just about combining content libraries or cutting costs, they're about building the technological and financial resources needed to survive in an AI-dominated entertainment landscape. Now let's talk about Supermicro, which I think is a rising star that many people might be overlooking in all the excitement about AI software companies. This company is starting to ship NVIDIA Blackwell Ultra systems in large volumes, and the specifications of these systems are absolutely mind-blowing. These systems have 50% higher inference performance and 50% more memory capacity compared to standard Blackwell processors. What's really amazing is that these systems can support power usage up to 1400 W per GPU. That's an enormous amount of processing power packed into individual units. But they've also developed sophisticated liquid cooling technology that reduces overall energy consumption by 40%, cuts required data center space by 60%, and reduces water usage by 40%. This combination of raw power and efficiency is exactly what companies need as they scale up their AI operations. The market is definitely taking notice. Needham Rice Supermicro's price target from $39 to $60, showing strong analyst confidence in the company's prospects. The fact that Lambda is using Supermicro servers to expand AI infrastructure in the Midwest is also a really good sign that AI adoption is spreading beyond just the traditional Silicon Valley tech hubs. From a professional investor's perspective, I see Supermicro in a really strong position because it's essentially become the hardware kingpin that everyone in the AI space depends on. However, we do need to keep an eye on potential capital access issues that might affect their production capabilities, especially as demand continues to surge. What makes Supermicro particularly interesting is that they're not just manufacturing standard servers. They're designing highly specialized systems that are specifically optimized for AI workloads. These systems require incredibly sophisticated engineering to arrange GPUs so they can work together efficiently, design cooling systems that can handle 24/7 high-intensity operations, and manage the complex power requirements that modern AI processing demands. But what I think is most strategically important is that Supermicro is essentially becoming a bridge between NVIDIA, which makes the AI chips, and all the companies that want to deploy AI but don't have the technical expertise to do it themselves. They're not just selling hardware, they're also providing comprehensive data center design consulting and helping companies figure out exactly what kind of infrastructure they need for their specific AI applications. In an era where every company wants to use AI, but most don't know where to start, this kind of expertise and guidance becomes incredibly valuable. However, we should also recognize that Supermicro's heavy dependence on NVIDIA creates some risk. If NVIDIA faces challenges, or if competitors like AMD or Intel develop superior AI chips, Supermicro could potentially be affected as well. Now let me talk about one of the most important trends we're witnessing, what we call AI democratization, which is essentially making AI accessible to regular people, not just tech experts and programmers. What we clearly see from Adobe's incredible growth is that people who have never written a line of code in their lives can now use sophisticated AI tools for creative work in business applications. This represents a massive shift from AI's early days, when only giant companies like Google, Microsoft, and Facebook had the resources and expertise to develop and deploy AI systems. Now we're seeing AI capabilities built directly into software that millions of regular people use every day, like Photoshop with AI-powered background removal, Premiere Pro using AI to help with video editing, or even simple business tools that can analyze data and generate insights automatically. This is what I believe will truly change the world on a fundamental level, because it's not just advanced technology for highly technical people, it's powerful tools that enable ordinary individuals to create, analyze, and accomplish things that were previously impossible without years of specialized training or expensive consultants. We're essentially seeing the barriers to entry for sophisticated, creative, and analytical work crumbling in real time. But this transformation also raises some really important questions that we need to think about. What will professional designers, analysts, and other knowledge workers do as AI takes over more of their traditional tasks? Will they evolve to become AI directors who guide and manage AI systems rather than doing the detailed work themselves? How will industries restructure themselves as the skills needed for success change dramatically? This democratization trend is definitely worth watching closely because it's creating both enormous opportunities and significant challenges for workers and businesses across virtually every industry. Another fascinating trend that's picking up serious momentum is what we call Edge AI, essentially bringing AI processing power directly to devices and equipment rather than sending all data to distant cloud servers for processing. We're already starting to see this in the latest smartphones that have dedicated AI chips built right into the device, allowing them to process images, translate languages, or analyze voice commands without even needing an internet connection. This might seem like a small technical detail, but the implications are actually massive for privacy, speed, and reliability. When AI processing happens locally on your device, your personal data doesn't have to travel over the internet. Processing happens instantly without network delays, and the system keeps working even when internet connections are poor or unavailable. Looking toward the future, we're likely to see this edge AI capability in autonomous vehicles that can make split-second driving decisions without relying on external signals, manufacturing facilities with AI systems that can optimize production processes in real time, medical devices that can provide immediate diagnostic insights, and smart home systems that can understand and respond to your needs without sending your personal information to external servers. But the technical challenge of making powerful AI work on small devices with limited battery power and processing capabilities is incredibly complex. It requires breakthrough innovations in chip design, software optimization, and power management. This is exactly where companies like NVIDIA, Intel, AMD, and even newer players like Apple and Qualcomm are competing fiercely to develop the most efficient AI processing chips. The company that can deliver the best combination of AI capability, power efficiency, and cost-effectiveness for edge computing will likely capture enormous market opportunities across multiple industries. When I look at the overall investment landscape right now, I think we're in one of those rare historical moments that's absolutely packed with incredible opportunities, but also comes with some serious risks that smart investors need to carefully consider. On the positive side, the growth trajectory for AI markets remains remarkably strong across virtually every sector we examine. Companies are consistently proving that they can generate substantial, real revenue from AI applications, not just experimental projects or future promises, but actual profitable business operations right now. The massive infrastructure investments we're seeing from major players demonstrate genuine long-term confidence in AI's potential, and the pace of technological development continues to accelerate in ways that, frankly, surprise even industry experts. We're seeing breakthrough applications emerge regularly, from medical diagnoses to creative content generation, that were considered science fiction just a few years ago. However, we also need to be realistic about some significant challenges and risks that could impact AI investments. Energy consumption for AI operations is increasing at an absolutely massive scale, which could create cost pressures and environmental concerns that might affect valuations. There's definitely risk of bubble-like investment behavior, where companies get overvalued based on AI hype rather than actual business fundamentals. Competition in the AI space is becoming increasingly fierce, which means not every company that looks promising today will necessarily maintain their advantages tomorrow. And we can't ignore broader macroeconomic uncertainties that could affect tech investments regardless of how promising the underlying AI technologies might be. For retail investors, I really can't emphasize enough how important diversification becomes in this environment. Don't put all your money into just one AI sector or even just tech stocks generally. Having a flexible, long-term investment plan is crucial, and you absolutely need to be prepared for significant volatility along the way. Don't forget that in the tech world, what's incredibly hot and trendy today can become yesterday's news surprisingly quickly. We've seen this pattern many times before. Companies that seem like inevitable winners today aren't guaranteed to maintain their leadership positions forever, especially in fast-moving technological fields. The key to successful investing in this space is thorough research, consistent monitoring of industry developments, and most importantly, the patience to ride out inevitable ups and downs while focusing on long-term value creation. I'd also strongly recommend that investors avoid getting caught up in short-term hype cycles and instead focus on companies that demonstrate real technological capabilities, sustainable business models, and clear paths to profitability rather than just impressive marketing about AI applications. One aspect of the AI revolution that I find absolutely fascinating is how it's become a truly global competition that goes far beyond individual companies. It's now a matter of national economic strategy and even national security for countries around the world. The United States has clear advantages in terms of innovation culture, venture capital availability, and established tech ecosystems, but China brings massive amounts of data from its huge population and very strong government coordination and support for strategic tech development. Meanwhile, Europe is taking a different approach, focusing heavily on strict data protection regulations and trying to establish ethical AI as their major competitive differentiator in the global marketplace. The decision by NVIDIA and OpenAI to invest heavily in the UK might be partly political maneuvering to create strong European alliances while reducing dependence on the potentially risky Chinese market due to ongoing trade tensions and regulatory uncertainties. For countries like Thailand and other emerging economies, I think the key is developing clear strategies for benefiting from AI technology advancement without becoming overly dependent on any single country or technology provider. The goal should be building domestic AI capabilities while maintaining flexibility to work with the best technologies regardless of where they originate. What's particularly interesting is seeing how different countries are approaching AI regulation, some focusing on innovation-first policies, others emphasizing safety and ethics, and others trying to balance economic development with social concerns. These different regulatory approaches will likely create distinct advantages and challenges for companies operating in different markets, which creates both opportunities and risks for international investors trying to navigate this complex landscape. Let me share something really important about AI's impact on employment that addresses concerns many people have about job displacement. The reality is that while AI will certainly automate some existing jobs, it's simultaneously creating entirely new categories of work that didn't exist before. We're seeing explosive demand for AI trainers who teach AI systems to perform specific tasks better, AI auditors who ensure AI systems work correctly and fairly, AI ethics specialists who make sure AI applications don't cause harm or perpetuate biases, and AI implementation specialists who help businesses figure out how to integrate AI into their operations effectively. These aren't just temporary transition jobs. They represent entirely new professional fields that will likely employ millions of people. Companies are actively searching for people who have hybrid skills, combining technological understanding with business acumen. And importantly, you don't necessarily need to be a programmer to succeed in many of these roles. What you do need is understanding of what AI can accomplish and how to apply it effectively to solve real business problems. What's particularly interesting is that jobs requiring creativity, complex decision-making, emotional intelligence, or sophisticated human interaction are actually seeing increased demand because AI still can't perform these functions adequately. I genuinely believe that over the next 5 to 10 years, people who master using AI as a powerful tool will have tremendous advantages in the job market, similar to how people who learned computer skills in the 1990s gained significant career advantages. The key is viewing AI not as a threat that will replace human workers, but as an incredibly powerful tool that can amplify human capabilities and enable people to accomplish much more than was previously possible. Workers who embrace this perspective and actively develop AI-enhanced skills will likely find themselves in high demand across many industries. Now I want to address something really important that doesn't get enough attention in all the AI excitement: the environmental impact of AI development and deployment. The truth is that AI operations consume absolutely enormous amounts of energy. Training a single large AI model can use as much electricity as an entire neighborhood uses over several months, and AI data centers are already consuming a significant percentage of global electricity production. This isn't just an abstract environmental concern, it's becoming a major cost factor that will affect the profitability and scalability of AI applications. As AI usage continues to explode worldwide, this energy consumption issue will become increasingly important for both environmental sustainability and business economics. This is exactly why we're seeing major tech companies making substantial investments in renewable energy sources. Google has committed to using 100% clean energy across all their data centers by 2030, Microsoft aims to be carbon negative by 2030, and other major players are making similar commitments. But beyond just using cleaner energy sources, there's also incredible innovation happening in developing AI technologies that are inherently more energy efficient. Technologies like neuromorphic computing, which mimics how biological brains process information, and quantum computing, which might be able to perform certain calculations much faster while using less energy, represent potentially game-changing approaches to making AI more sustainable. From an investment perspective, companies that can deliver powerful AI capabilities while using significantly less energy will have major competitive advantages both in terms of operating costs and social acceptance. This creates interesting investment opportunities in companies developing efficient AI hardware, renewable energy infrastructure, and innovative computing architectures.
Let me pull together all the major themes we've discussed today into some actionable insights for investors. First, U.S. stock markets reaching historic highs despite concerning economic data clearly demonstrates the incredible power and market confidence in the AI revolution. Investors are essentially betting on technological transformation overcoming current economic challenges. Second, the Federal Reserve is facing an extremely difficult balancing act between controlling inflation and supporting economic growth, and they'll likely take a measured approach with gradual rate cuts rather than dramatic moves. Third, NVIDIA and OpenAI's major expansion into the UK represents global-scale AI competition and shows how AI development has become intertwined with geopolitical strategy and international relations. Fourth, Adobe provides an excellent case study of successful AI transformation, generating over $5 billion in AI-related revenue and proving that traditional companies can successfully reinvent themselves around AI capabilities. Fifth, Supermicro is emerging as a critical AI hardware infrastructure provider with their advanced Blackwell Ultra technology, positioning themselves as essential enablers of AI deployment across industries. And finally, the entertainment industry consolidation reflects broader trends of industries adapting to AI-driven disruption by building scale and capabilities needed to compete in an AI-dominated future. For investors, this creates a landscape full of opportunities, but also one that requires careful risk management, thorough research, and patience for long-term value creation, rather than short-term speculation.
As we wrap up today's discussion, I want to emphasize that we're truly witnessing a historic transformation, comparable to the Industrial Revolution or the rise of the Internet, except it's happening much faster and with potentially even greater impact. Companies that successfully adapt to AI will likely become the dominant players in their industries, while those that failed to adapt risk becoming irrelevant surprisingly quickly. Investing in AI-related opportunities isn't just about seeking financial returns. It's about participating in one of the most significant technological and economic transformations in human history. However, I want to stress again that investing in the AI space requires maintaining a clear head and realistic expectations despite all the excitement and hype surrounding these technologies. Don't get so caught up in the pace of change that you forget to evaluate company fundamentals, competitive positions, and realistic growth prospects. Remember that stocks can be incredibly volatile. Companies that gain 100% in 6 months might lose 50% in the following 2 months. Having a clear exit strategy is crucial, whether that means setting stop-loss orders to limit potential losses or taking profits when you reach predetermined targets. Most importantly, never risk money you need for daily living expenses on high-risk investments like these. Only invest money you can afford to lose completely, and think of AI investments as long-term commitments of at least 3 to 5 years to ride out inevitable volatility and give these technologies time to mature.
The AI revolution is real, it's happening now, and it will create enormous wealth. But it will also create significant risks and challenges along the way.
The investors who succeed will be those who combine genuine enthusiasm for these amazing technologies with disciplined risk management and realistic expectations about the timeline for returns. Thanks for joining me for this deep dive into the AI investment landscape. I hope this information helps you make smarter investment decisions as we navigate this incredible transformation together. Until next time, keep learning, stay curious, and happy investing.
All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.